Hey everybody, I hope everyone's doing well and had a good day. This is going to be a brief recap of the Emini 5-minute chart for Friday, December 6th, 2024. On the daily chart, bottom left of the screen here, we have a tight bull channel, only a couple of bear bars along the way up, and the bear bars have big tails below, small bodies relative to the tails, so relatively weak selling pressure. Consecutive buy climaxes, probably not too sustainable, and will pull back eventually. But what we have here, we're getting far from the moving average, and we have a bear bar yesterday. It's a bad stop order buy signal bar. It's a bear trading range day, or bear trading range bar, and the odds are there are sellers above the bar, more traders looking to sell up here than to buy. Why is that? Because markets are fractal, and at some point this bar was closing on its high, and on some time frame some trader bought that close and they got trapped on the pullback, and they'll likely use any rally we get to avoid a loss. They'll probably exit at break even or take what they can get. You can see we went a little bit higher than the prior day's high, but ultimately we found sellers. So let me add, here's yesterday's high in blue, and then here's the 5-minute chart for the day. Gap up on the open and a big bull bar, bar 1. So gap up, it's basically a bull breakout and follow through. That's good for the bulls. And look at what we had going into the close of the prior day. There's several different ways you can draw wedge bottoms, but what is a wedge? It's 3 pushes. So we have 2, 3, maybe even more pushes down, and we're breaking below a channel line in what's an overall trading range environment. The market's up, down, trying to go down, but possible second leg trap, 1, pullback, 2, plus breakout of a channel, wedge bottom, and we ultimately found buyers. We vacuumed up with follow through, so big enough breakout on the open that will probably get a second leg up. Weak reversal attempt on bars 2 and 3. The bears tried to reverse the market down on 2. Bulls tried for resumption. Bulls tried to reverse a second time, and then the bulls had resumption a second time. This is a micro double bottom, high 2, bull flag, more clear on a smaller time frame, but here we see a trend bar, 2 brief reversal attempts, and then a second leg up. Up here, very tight trading range. I thought it was important up here to think about the overall context. And by that I mean the big picture, more major pattern. 1, 2, 3 pushes up. We might be high in what might be an expanding triangle, maybe 2 pushes down here and here, or here and here, and then 3 legs up. So we might be at resistance up here. And you can see what's happening. We're going more sideways, overlapping bars, bear bars closing on their low. When we start to go sideways for 5 or 10 bars, the direction becomes unclear. Right now, this looks like a bull flag. We have a rally. We're going sideways. It's not a 20-bar trading range, so the bulls still might have the probability here that this is a bull flag, maybe a triangle bull flag, possible final flag. But the big picture context is a problem. Late leg, high in a trading range. The bears hoping we get the surprise, which would be a bear breakout of a bull flag. That's ultimately what we got on bar 2021. 3-bar micro channel, good for the bears. Bars closing below the prior bar's low, but it's climactic. You can count maybe 2 or 3 legs down, likely going to pull back. But even if we do pull back, we're probably going to find sellers above. Traders are trapped on this downside breakout. Second leg down is likely. The problem is bears or traders don't want to sell down here. This is more of a buy zone. Here's a breakout point. The gap up in bar 1, we broke above this lower high, and you can see we're testing it. This rally should get a second leg, even if it pulls back deeply. And you get deep pullbacks in trading ranges and delayed second legs all the time. So this is common. But I do think this is a problem for the bulls. Buy climax, bad follow through. Buy climax, bad follow through. Endless pullback leading to a bear breakout, which will probably get a second leg down. And then I just can't spend too much time on this. I have things I need to do tonight, and I have thoughts I want to share in this video. 24, 25 consecutive bull bars, but traders could count this as 2 legs up. 21 low, 22 high, could be leg 1. Deep pullback, but still a higher low, and then leg 2. Leg 2 is weaker. We rallied, pulled back, rallied, pulled back, rallied a third time. But maybe this is too tight. It'll need a second leg. And we got it here or here. So there's 2 or 3 legs up here. It's a double top. After a bear breakout, that should get a second leg down. And it did get a second leg down. And it's basically a spike pullback channel. And the spike is the strongest part of the trend. And then the channel is the weaker part of the trend. So spike, pullback, channel, market getting weaker, sell climax, bad follow through, sell climax, bad follow through, but tight enough that the first trend line break will probably fail. And then one more weak push down, sell climax, pause, sell climax, bull bar closing on its high. 40's an always in flip in my eyes. I think traders who are short need to get out above 40, and traders can buy, taking a chance that we get a major reversal or at least a very deep pullback. The first target might be the top of this channel. Think through the market cycle, breakout, pullback, and the end of the pullback and the start of the channel down is typically resistance. It's a magnet. You can see exactly where we tested, because this channel I just had drawn, we know that channels evolve into trading ranges most of the time. So if we have a bear channel going down, what we logically expect most of the time is this to become a trading range. So to be followed by a bull leg in a trading range. That's what we got. The problem up here is that we had good bull bars, but then much smaller bars. Momentum slowing down right at resistance. If you think about the sell-off all the way from maybe here to here, that's a breakout, and that'll probably get a second leg down. So I want this to be clear. It's almost like I'm showing what a line chart looks like. I'm using extremes rather than the close of bars, but it's basically the same idea. So here's the start of the sell-off, here's the bottom of the sell-off. Here's 50%. So traders are selling around the 50% pullback of this leg down. The trend line break was fairly steep, so the bulls will be trying for a major trend reversal after this rally, but they'll judge the strength of the resumption down. So bear trend, minor bear trend, it's really overall in a big, broad trading range. But bear trend, trend line break, now we're getting a retest. This needs a second leg down. There's the second leg, and now we're finding support at the bear trend's extreme, where traders were trapped down here. Bulls who did not buy missed the rally. Bears who were selling got trapped into a bad trade. Both are looking to buy down here at support. And then we had a relatively weak channel into the close, but we did find a bottom here and rally into the close of the day. Now, there's one more thing I wanted to add about the price action in here. I thought was really interesting because I don't think I go into it very much. And part of it, it's easy to look at this and be really confused. And it is confusing. And I jokingly call this a zebra pattern, and you can obviously see why. Every bar is overlapping. You can't get consecutive bars in either direction. But despite all of that, markets are still really well behaved, and we can see the market cycle almost on every single bar in here. So when you really think about how price action is fractal, if I showed you this chart and you didn't have the time axis, you didn't have the price axis, you just saw the chart, you would have no way of telling if this is a daily chart, a monthly chart, a 2-minute chart. There's no way to know. And that's because it's fractal. And if you think about how markets are fractal and what we basically see unfolding on every bar, in every series of bars, is the market cycle. The more we can understand the market cycle, the more we will understand what's going on bar by bar and tick by tick. So the example I wanted to show up here, I believe it was bar 7. And let me think. It was either 6 or 7. Basically, if markets are fractal, and I have a really hard time articulating this, so this is going to take more thinking on my end, but basically, traders can see every bar as leg 1 and leg 3 at the same time, or they can see leg 3 as leg 1. So for example, and same with leg 2. So for traders on the 5-minute chart, we can pretty easily see 3 pushes down, 21, 32, 39, 1, 2, 3 pushes down. What happens after 3 legs? The market often reverses. We're getting a lot of overlap. The trend is getting weaker. Channels evolve into trading ranges, so magnet above. But for some trader, this is a bear bar opening up here and closing down here near its low. This would simply be one trend bar. See if we can visualize it. So basically like this. Sorry about that. Okay, I can't really move that, but the whole point is that on some time frame, the bar opened here and closed here, and this is what the bar looked like. And that's where context can really help. Look to the left, big up, big down, big confusion, probably a trading range. So even if this looks like a big strong bar and possibly a leg 1, you're still in a buy zone. You're at the bottom of a trading range. You're testing support, and maybe there's price control, but not so much time control. And if we crack open the bar, this is what's inside. We have a spike in channel. So by the close of the bar, even if it closed near its low, if we had a spike in channel, the most probable next move would be back up, even if the bar closed near its low, because of the spike in channel. After 3 pushes down, we'll probably test back up here. With all that said, there was one bar in here, and I think it was bar 7, where I was thinking we sold off from the high of bar 7 to somewhere in this bar. Somewhere in this bar, and I'm thinking about just bar 7 by itself. Think about how bars form. Bar 7 either sold off to the low, rallied to the high, and bounced like crazy, or maybe it sold off quickly, stalled, sold off more, stalled, sold off more. But no matter what it did, it probably went down, up, and then back down. And I can't remember the exact way I drew it earlier, but it was basically like something like this. And I thought, somewhere within here, there's a bear breakout that is at the top of a wedge. So 3 pushes up, 1, 2, 3, even 4. So micro double top, high in a trading range, bottom of the range down here. Let's look at it like more like this. And somewhere during this bar, early in the bar, we had a breakout. That breakout was likely to get a second leg down and test lower. And I'm just guessing that maybe it was from here to about here because we retested there. And if we see if I can duplicate that. TradeStation will not let me move my drawing. So maybe I can just do that. No. Maybe that'll work. I'm trying to demonstrate the market cycle on a very small time frame. Somewhere within these 2 or 3 bars, 7, 8, 9, the market sold off, pulled back, sold off again, pulled back again, tried to sell off a third time and failed, and then reversed back up. So 10:05 to 10:15. So this is the bear breakout and a minor second leg, deep pullback, second leg down, but higher low. And then traders trapped down here for a leg up. It's very minor. But the point I'm trying to make is that the market cycle never rests, and it doesn't matter if the market is in a tight trading range or a breakout. The market cycle is happening. It's just that the level of energy in the market is manifesting differently, and it's all momentum. Think about it. The charts only plot time and price. So all we can do is judge momentum based on time, whatever your time frame may be. This is the 5-minute chart, and price. And everything is relative. So taken out of context, bar 7 might be a huge bear trend bar, but when we look at it in this context, it's more of an average sized bar, and it's more of a trading range bar because it's an inside bar and it's occurring with a lot of overlap. It's also counter to the direction of the trend leading up to it. But yeah, the point is, even in zebra patterns, the market cycle does not rest. Now, I had a few thoughts I wanted to share about systems in my last video, and I'm going to see if I can think more about that and share what I was going to talk about. I don't remember exactly what I was going to say. This might be a little bit of a longer ramble. I had a lot of thoughts I wanted to share. So today's December 6th, and I joined Systems Academy last year around this time. So it's been about a year of Systems Academy. And I was fortunate enough to work alongside Brad as my coach. And I don't know if anybody has heard about Systems Academy. For me at the time, I just happened to stumble upon it. I feel lucky that I just happened to stumble upon it. But if anyone hasn't heard of it, I want to talk a little bit about what it is, and because it's basically there's a program reset and there's an opportunity to basically apply to see if you're eligible to join, and now's the time to do that. So I want to bring more awareness to that. I think if you want to learn how to trade, Systems Academy is the best possible way to do that, and that's from Ali Moinaf Shari using Brooks price action. So Systems Academy, it's like anything else you do in life, and you get what you put in. And there's no way around this. This is just one of those laws of the universe. You get what you put in, you reap what you sow. So think about what you want to do if you want to join, and if you do end up joining, you're certainly a serious trader. You're looking at this as an investment. It's almost like going to university for trading, and I don't think there's any other school out there that could teach price action trading like this one. And I want to share some things I wish I had known going into it. And one of those things, I would challenge everyone to just think about Systems Academy and leave questions in the comment section of this video. If you have any questions relating to Systems Academy, I will maybe give it a week or two, and if anyone wants to ask questions, maybe even less than that, but I'll go back and answer questions to the best of my ability. But as far as systems go, what I want to do, I also want to provide valuable information whether you join or not, and just share my experience. So what I would challenge everyone to do is to simplify what they're doing. When you look at a chart, simplify what you're doing. So what I did, I took a huge step back, what feels like a big step back, basically within the last week. And I almost feel like I learned how to learn in my time with Systems Academy, because when you just have the Brooks trading course, you have an endless sea of information, and it's overwhelming. And you hardly know where to start, And what I did just in the past week, I took a step back, and it's basically humbling myself and just thinking through the more major breakouts on the screen, trying not to get too caught up in the minor details in here, and just try to capture second legs after breakouts like this, or like this, or like this. So that is what my goal has become. And the best way I can do that is to simplify what I'm doing. So I'm looking for one signal every day. And I'm only trading the first couple of hours of every day, looking for one specific signal, and that signal is supposed to tell me, it's signaling to me that, hey, this breakout is probably going to get a second leg, more than likely, 60% probability or greater. So look to sell a pullback and capture the second leg. And that's the system that's the overall idea of what I'm trying to develop with systems. And I want to also I can't help but compare trading to other things, because just like price action is fractal, we live in a universe that is fractal, and on a very deep level, everything is the same. Everything is made up of atoms. And the atoms may be different in vibration, different energy, but I wouldn't even say different energy. I would say it's the same energy, but a different level of vibration. And that's the way I think through the bars on the chart, the market, momentum. It's just different levels of energy. So the comparison I want to make is with sort of the trades like plumbing or electricians, that kind of thing. So anyone who worked in the trades, like as a plumber or as an electrician, anything like that, you'll know exactly what I'm about to say. So my brother's a plumber, and he's been a plumber for about 3 years, and I did electrical work for about a year, a couple of years ago at this point, which is why this analogy resonates with me. And so my brother and I had a conversation about this yesterday, and I thought it'd be worth sharing. Also, I'm sure whatever I'm about to say applies to any job or literally anything. I think trading can be compared to anything. Because again, it's a fractal universe. But, even if you're not in the trades, stick with me. So, day trading and plumbing, to me, I see them as basically the same game. My brother goes to work full time, he goes to night school, he goes to class, and he's developing his knowledge and understanding and his skills as a plumber. And he's developing a relatively rare set of skills. Your toilet stops working or your sink backs up. Most people don't know what to do. And that's where the right guys for the job come in. So what can seem like a catastrophe for me could be a simple fix for my brother. But since I'm ignorant on the subject, I can't help myself. The odds are I'm relatively desperate, and I'm willing to pay top dollar to get my pipes fixed and to get the job done well. And this is a scalable thing. So my brother told me a story once where he installed a spigot for a friend which took him about 30 minutes, and he made like $100. And if you do the math on that, he was trading his time for a rate of $200 an hour. And I know it's a little off topic, but there's a reason I'm bringing it all up. Any manual labor job, like plumbing, follows a code. There are certain requirements for fittings and safety violations and all that kind of stuff. So the reality is, sometimes you have to make minor violations of the code, and you cannot follow everything exactly by the book. And that's okay, because you can still get an inspector to check off on it. They'll pass the inspection as long as it's safe, it's functional, and it's practical. So to tie in everything that I'm saying with trading, the Brooks trading course is like the code for price action trading. So there are exceptions to every rule, but everything is accurate and keeps you on the right track. An inspector is someone who knows the code book well and inspects the manual work done by the plumber or electrician or whoever else to make sure everything else is in line with the code. But the inspector does not get their hands dirty. So the inspector is like a chart analyst. You can know everything there is to know about plumbing code or the Brooks trading course, but that doesn't mean you'll automatically be a great plumber or trader. You may make a good inspector or chart reader, but the manual labor, the motor skills involved, are not developed through intellectual study. So they can only be developed through practice and experience. Al says there are 2 skills you have to possess, and each are equally difficult to obtain, but both are necessary. And that is, you must develop the skill of chart reading, and you must develop the skill of trading. So with all that, the big step I took backwards last week, it sort of seems counterintuitive. It seems like it's the opposite of progress, but sometimes you have to move backwards to go forwards. If anyone's seen the spiral of the learning curve in Ali's article, you'll know what I'm talking about. At a certain point, you learn everything you need to know to trade, and you just keep circling back to the same information each time with a new, deeper understanding. So I'd been hearing the same advice from Brad and my classmates all year, but it took me about a year to internalize and really grasp what it all meant and what they were saying. So when I say I took a big step back, again, I mean I stopped focusing on the small details, stopped trying so hard when reading charts, and I created a system that is so simple that a child could trade it. So by that, I mean I have a certain signal I look for every day. And when I see the signal, I instantly enter a trade. And then I observe what happens over the next 3 to 15 bars. And what I've done is I've created a repeatable process that is so simple to me that I could do it in my sleep. It's underwhelming. And again, I've only been trading the first 2 or 2.5 hours. So far, I have seen 1 or 2 signals a day in that window of time. The trading system that I'm trading right now is not great for making money. And I knew that intellectually. As I put it together and as I execute it, my theory is true. However, the system was not built to make money. This system was designed to collect data, information, and to better understand what systems are, how to build them very simply from scratch, and basically how to make quantum leaps one baby step at a time. When you have a repeatable process, you have some controlled variables. The signal is consistent, the entry is consistent. You can even make the exit consistent. You can make any part of it consistent. For example, let's say you're building a system revolving around breakout and follow through. So here we have a bear breakout 48, follow through 49. That's a signal, breakout, follow through. So what you can do, the way that I'm basically trading the signal, is just instantly sell the close of the bar. Stop up here where it belongs, sell the close, go for 1 times the risk. Now I know that most of the time breakouts get pullbacks, and I could probably sell a pullback, but what I'm trying to do is develop the motor skill of just recognizing the signal and acting, and to prove to myself that I can follow those guidelines. So what would happen here? Sell the close, you sit through a minor reversal, a couple of attempts to rally, and then you get a second leg. In this case, double bottom just above the target. But that's kind of the point. The point is there's a signal, you have a repeatable process. Every time you see breakout and follow through, you just take the trade. It's basically the same here, 43, 44. Bull breakout, follow through, just buy the close, and then watch what happens. And then maybe you'll start to realize, hey, this bull breakout and follow through looks like it's high in a trading range. There's resistance over here. Momentum slowing down, bad follow through. Maybe this signal is a better signal to wait. Wait for more information. When you see the momentum dwindling, bear bar closing on its low, maybe you fade this breakout. You sell here, look to exit somewhere down here. I don't want to get off topic and just start talking about ideas. I want to just talk more about the process. So by keeping some actions consistent, not only do those actions become a habit and eventually understood at a subconscious level, but it also gives you new room to work with and to explore. So forget about the outcome. Just do what the system asks of you to do. And when a signal leads to a losing trade, what was the context and what happened? And when a signal leads to a winning trade, what was the context, what happened? So my plan is basically all of that. I have one signal I'm looking for in the first couple of hours each day. I'm automatically taking signals to develop the motor skill and trust in myself that I can execute on a planned system, regardless of outcome. I'm trading small enough that I truly do not care if I win or lose a trade. I'm simply following a process. And I've already noticed a few benefits to this. And I know what I'm doing is something that begins as really uncomfortable, something I've never done before. There's all these restrictions, and I feel like, well, if I'm restricted, how am I ever going to become a discretionary trader? And I didn't like the thought of that. But the restrictions they're really a requirement. And I'm going to quote Jordan Peterson here, and this quote is taken out of context, but the context doesn't really matter. He said something like, you need constraints on the system so that the system doesn't drown in an infinite sea of interpretation. So just think about that. Because there's a lot of ways to interpret what's going on a chart. And the best thing you can do is restrict yourself and have guidelines to follow. So again, I'm just looking for it's one simple system with one signal. I'm only trading the first 2 hours, and I'm making my review videos even shorter. And all of these restrictions, what they've done for me is they've increased my productivity and the quality of my work, made all of the overwhelm I felt go away, and it makes me sort of develop noticeable progress by the day. So at the end of each week, I can take my collection of handful of trades, maybe somewhere between 5 and 10 trades a week, and just inspect them and look at them, study them, and see how I could improve my system by tweaking something small. And now I have a new process to test going into the next week. And then I follow those guidelines. I follow, the rules, the restrictions that I made based on the problems I saw this week. And then I apply it to next week. I want to wrap up by saying that learning how to trade takes time, no matter what resources you have or the amount of effort you're willing to put in. You may have heard the saying that you can't make a baby in 1 month by getting 9 women pregnant. That's obviously true, but there's also real truth to that with trading, and I think with learning anything. So I wouldn't rush through the video course as quickly as possible so that I can become a great trader as soon as possible. That was the mindset I had going into studying Al Brooks' price action. Just learn all the information as quickly as possible, and I'll achieve my goals. And that's just the opposite of what you should do. For me, looking back, if I could give my past self advice, I would say take your time on the videos, pause them and think about what Al is saying, ask questions, and revisit the same videos over and over. So it's important to remember it's not a race. Sometimes less is more, and some things just take time, so be patient. Again, please feel free to leave comments in the comment section of this video, any questions or any comment at all. And that's all the time I have for this video. So I want to thank you for watching, and I hope everyone has a good weekend.